Hey there, investors. Are you ready to explore a new opportunity in the health insurance sector? Today, we're diving deep into the world of health insurance with Niva Bupa, formerly known as Max Bupa. This company has been a significant player in the Indian market, offering a variety of health insurance plans tailored to meet the needs of individuals and families. They're gearing up for a potential IPO, and we're here to break down everything you need to know. From their financial health to market position, we'll cover it all. Is this a buy and hold forever stock or a total dud? That's the million-dollar question, and we're going to help you find the answer. Let's find out. Niva Bupa is a prominent player in the Indian health insurance market. They've been around for a while, providing a range of health insurance plans to individuals and families. Their reputation for customer service and comprehensive coverage has made them a trusted name in the industry. But how do they stack up financially? With their IPO on the horizon, it's time to put Niva Bupa under the microscope and see if they're worth your hard-earned money. We'll dissect their financials, looking at revenue growth, profit margins, and market share. We'll also explore the booming Indian health insurance market, which has seen significant growth due to increasing awareness and demand for health coverage. The Indian health insurance sector is expected to grow exponentially in the coming years, driven by factors such as rising healthcare costs and a growing middle class. We'll weigh the pros and cons of investing in Niva Bupa. On the one hand, their established market presence and growth potential are promising. On the other hand, the competitive landscape and regulatory challenges could pose risks. Fasten your seatbelts because we're about to navigate the exciting and sometimes risky world of IPOs. Stay tuned as we delve deeper into Niva Bupa's journey and help you make an informed investment decision. Before we talk numbers, let's rewind a bit. Niva Bupa wasn't always Niva Bupa. They started their journey as Max Bupa, a joint venture between Max India and the UK-based Bupa Group. Talk about international collaboration. In 2020, they underwent a significant rebranding, ditching the Max and embracing Niva. This symbolized a fresh start, a renewed focus on leveraging technology and innovation to make healthcare more accessible. This rebranding wasn't just cosmetic. It represented a strategic shift towards a more customer-centric approach. Think simplified processes, digital platforms, and a commitment to providing a smoother, hassle-free experience for policyholders. They're not just selling insurance, they're selling peace of mind. Now, let's talk about their mission. Niva Bupa is all about making quality healthcare accessible to everyone. They believe that everyone, regardless of their financial status, deserves access to top-notch medical care. They understand that medical expenses can be a huge burden, and they're on a mission to ease that burden for millions of Indians. Medical bills can be overwhelming, and Niva Bupa aims to provide solutions that alleviate this stress. They're focusing on two key things: affordability and accessibility. By offering a range of plans, they ensure that there's something for everyone, from young professionals to large families. They want to make their plans accessible to a wider population, especially those who are often priced out of traditional insurance options. This includes reaching out to rural areas and underserved communities. But it's not just about affordability. It's also about providing comprehensive coverage that meets the diverse needs of their customers. They're also leveraging technology to make their services easily accessible. This means using the latest digital tools to streamline processes and improve customer experience. Think mobile apps for policy management, online claim submissions, and telemedicine consultations. These innovations make it easier for customers to manage their health insurance and access medical care from the comfort of their homes. They're embracing the digital age to make healthcare more convenient and hassle-free. By integrating technology into their services, Niva Bupa is setting a new standard for health insurance in India. All right, let's talk money. Before you even consider investing in an IPO, you need to scrutinize the company's financials. Think of it like checking under the hood of a car before you buy it. Niva Bupa has shown steady growth in recent years. Their revenue has been climbing, and they've been expanding their customer base. That's a good sign. It means people are buying what they're selling. Now, the IPO details are still under wraps. We don't know the exact size of the offering or the price band just yet. Keep an eye out for those details as they become available. Remember, the IPO market can be volatile. Section 5. The Indian health insurance landscape, ripe for growth. Now, let's zoom out and look at the bigger picture. The Indian health insurance market. This industry is booming. India has a massive population and awareness about health insurance is on the rise. People are realizing the importance of having a safety net, especially with rising healthcare costs. This is creating a huge opportunity for health insurers like Niva Bupa. The government is also playing a role. They've introduced initiatives like Ayushman Bharat, which aims to provide health insurance coverage to millions of Indians. This government support is further fueling the growth of the health insurance sector. Section 6. Investing in Niva Bupa, the pros. So, should you invest in Niva Bupa's IPO? Let's weigh the pros and cons. On the positive side, they're operating in a high-growth industry. The Indian health insurance market is expanding rapidly, and Niva Bupa is well-positioned to capitalize on this growth. They're also leveraging technology to their advantage. Their digital platforms and focus on customer experience give them an edge in attracting tech-savvy customers, especially millennials and Gen Z. And let's not forget about their strong brand presence. They've built a good reputation over the years, and that brand recognition goes a long way in the competitive insurance market. Section 7. Potential risks, navigating the challenges. But it's not all sunshine and rainbows. Investing in Niva Bupa's IPO comes with its fair share of risks. They face intense competition, not just from other private insurers, but also from public sector giants. The insurance industry is heavily regulated, which can sometimes stifle innovation and impact profitability. And let's not forget about the challenge of managing costs. Keeping premiums affordable while providing comprehensive coverage is a delicate balancing act. It's crucial to remember that IPOs can be volatile. The initial excitement surrounding an IPO can sometimes lead to inflated valuations. It's important to approach IPOs with a healthy dose of caution. Section 8. The verdict. Is Niva Bupa the right investment for you? So, is Niva Bupa a buy? This is a question that many potential investors are asking themselves as they consider their options in the ever-evolving financial landscape. The answer, like most things in investing, is it depends. It depends on your individual financial goals, your risk tolerance, and your investment strategy. Niva Bupa has a lot going for them. A strong market position, a focus on technology, and a growing industry. Their innovative approach to health insurance and their commitment to integrating technology into their services make them a compelling option. But they also face challenges: competition, regulations, and the need to manage costs effectively. The health insurance market is highly competitive, and staying ahead requires constant innovation and strategic planning. Managing costs is crucial for any business, and Niva Bupa is no exception. They need to ensure that their expenses are kept in check while continuing to provide high-quality services to their customers. Before you invest, do your homework. Scrutinize their financials, understand the risks involved, and take a close look at their business model. Analyze their revenue streams, profit margins, and growth projections. Determine if their growth potential aligns with your investment goals and risk tolerance. Consider how their business fits into your overall portfolio and whether it complements your other investments. Remember, investing in an IPO is like placing a bet on a company's future. It requires careful analysis and a willingness to accept the potential for both rewards and risks. The market can be unpredictable, and it's important to be prepared for any outcome. It requires careful analysis and a willingness to accept the potential for both rewards and risks. Make sure you are comfortable with the level of risk you are taking on and that you have a clear understanding of the potential rewards. In conclusion, Niva Bupa could be a promising investment, but it's essential to do your due diligence. Weigh the pros and cons, consult with financial advisors, and make an informed decision based on your personal financial situation and investment strategy. Section 9. Disclaimer: not financial advice. One last thing, folks. I'm not a financial advisor, and this isn't investment advice. Always do your own research and consult with a qualified professional before making any investment decisions. Investing in the stock market involves risk, and you could lose some or all of your investment. Invest wisely.